Hello, my good people. It's my hope that you are well. Every Thursday, we get the results of the Treasury Bills that have been floated for that 1 week. And yesterday, we got the results. And it's good we take a minute and get to see what is happening in the world of Treasury Bills. As we had seen last week, interest rates has been on a downward trajectory. That means that interest rates are going down every week, and the same trend continues this week. And we can see we can get a review of the past about 5 weeks, and we see how Treasury bills rates has been going down each and every other week. If you check the 91 days Treasury bill, on the 7th of October, the rate was at 15.68%. On 14th of October, it came down to 14.99%. On the 21st of October, it came down to 14.7%. On the 28th of October, it came down to 14.43%. And this week, it has gone down further. Now not 14 point, but it has gone down to 13. As it is at 13.96%, way down from a 15.68% like a month ago. The interest rates are at 13.96%. When we go to the 182 days Treasury bills, on the 7th of October, the rate was at 16.49%. On the 14th of October, it came down to 16.09%. On the 21st of October, it came further down to 15.63%. On 28th of October, it came down to 15.15%. And now we are at 14.52%. All the way from 16.49 to 14.52%. And on the 364 days Treasury bill, on the 7th of October, the rate was at 16.73%. On the 14th, it came down to 16.33%. On the 21st, it came down to 15.91%. On the 28th of October, it came down to 15.47%. This week, we are at 14.96%. All the way from 16.73% to 14.96%. And maybe we still expect the rates to go down even further. So for this particular week, we have said that the 91 days Treasury bills had a rate of 13.96%. The government wanted to borrow 4 billion. Investors were willing to give 7.3 billion. That is an oversubscription. And for the 182 days, the government wanted to borrow 10B. Investors were only willing to give 5.7B. That is, and the rate was at 14.52%. For the 364 days, the government wanted to borrow 10B. Investors were willing to give 14.9B. And the rate was at 14.96%. So one thing that you can pick from this week's Treasury bills results is that investors has shifted to the Treasury bill with the longest term, that is the 364 days, because you see the amount that was bidded on the 91 days was 7.3B. And the amount that was bidded on the 364 days was 14.9B, more than double actually of that. This is because we all expect the rates to continue going downward even further. So what is the best decision that you can make now? It is get the current rate for the longest period possible. And when it comes to Treasury bills, the longest period possible is 1 year. So that's why you find that majority of the investors have shifted the focus to to the one that is giving the highest rate, that is the 364 days, 14.96, because they know that now once they purchase that bill, they are promised a return of 14.96 for the next 1 year. This is simply because we don't know how low the rates will go. So for them, they have gotten a rate of 14.96%. So if the rate happens to go down further, they start to gain. But if somewhere along the way rates get to turn and start going down, they start to lose. That is that's why it is also involves a lot of some bits of risk. You choose your struggle. You either fix so that if it goes down you gain, you don't go down with it, but if it goes up, you also don't get to enjoy the high interest rate. Then the other thing that we can say at this point is that the rates are going down, and actually these are the highest rates that you might expect to get, because if you have a money market fund, expect the rate of that money market fund to also go down as the rates of treasury bills go down, simply because the money you have deposited in that your money market fund, it is the same money that is invested in treasury bills, and what you get is a net return. So the fund managers you get to come to invest on the money market fund, of course watatoa sakas kidogo, and you get a net interest. So as the rate of money market as the rate of treasury bills go down, it means that your fund manager will get a lower interest, which means they will also give you a lower interest. So as these rates go down, expect the rates of other investments to also go down. But regardless of the rates are still okay compared to other investments that are passive, that have a very low risk. So you can still go forward and get to purchase that treasury bill. The downward interest rate trajectory should not be a discouragement if at all you have thought of venturing into the treasury bills world. See you next time.